If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi and welcome back to Courtside Financial. In this video, we'll be analyzing NIO's Q1 earnings report and talking about what it might mean for investors. From the number of vehicles delivered to the company's gross margin performance, we'll explore every aspect of NIO's financials and talk about what it can mean for its future growth prospects. So make sure you guys go get some water, go get a pen, go get some paper, and really tune in for this video because there's a lot of great information to come. But before we begin, I want to make sure that you guys are subscribed to the channel. If you're new here, make sure you hit the like button because it really goes a long way in helping out the video. And then also click that notification bell icon so you're notified about every time I post some cool content. So early on Wednesday morning before market open, NIO released its fourth quarter earnings, and unfortunately they fell short of investor expectations. The Chinese electric vehicle company has been working hard to increase deliveries over the past few years, but to say the least, it's been a bumpy ride. The Q4 earnings report showed another top line miss as well as disappointing earnings. During the quarter, NIO reported revenue growth of 2.33 billion, which was 62% year-over-year growth, but missed Wall Street's estimates by $230 billion. But interesting here, in comparison to competitor Li Auto, they reported much higher gross margin of 20% in the same quarter and expects to deliver up to 55,000 vehicles in the first quarter of the year. Meanwhile, XPeng has yet to release its earnings report, leaving investors curious about its performance. The average analyst estimate has already been reduced by $750 million in the last 6 months, which is a drop of about 23%. Even with these heavily reduced expectations, NIO still missed the mark by a significant margin. Gross margins also took a hit, declining significantly sequentially and on a year-over-year basis. One of the major reasons for this was a reduction in vehicle margins due to inventory provision, accelerated depreciation on production facilities, and losses on purchase commitments for the ES8, the ES6, and the EC6. This is a huge setback for investors who were hoping and waiting for the company to become profitable. To make matters even worse, even if we exclude these factors, the margins still show a decline. The company has already announced discounts during Q1 and is still facing some sales troubles, which is unlikely to boost the margins anytime soon. If you're not selling any cars, then it's going to be pretty hard to boost the margins because this is a business that operates at scale. This news is bound to make investors nervous about the company's future growth potential. A lot of investors were in for a shock when NIO's Q4 earnings were announced. But the bad news didn't really stop there. NIO's management is forecasting deliveries of just 31,000 to 33,000 vehicles for Q1 2023, and that's a far cry from what was expected. While deliveries for the first 2 months of this year have already exceeded 20,660 units, March is predicted to be on par for even lower than February at 12,157 vehicles, despite it being a longer month. The February delivery numbers comprised of 5,307 premium smart electric SUVs and 7,120 premium smart electric sedans. NIO's cumulative vehicle deliveries of February 28, 2023 have reached 310,219 vehicles, demonstrating the company's continued success in the electric vehicle market. NIO's total revenues for the quarter are expected to fall within the range of 1.58 billion to 1.67 billion, which is significantly lower than the street's average estimate of 2.78 billion, an average that has already decreased in recent months. It's a tough pill to swallow for investors, but it's important to note that the company is still going through a transitional period with the launch of its new models, and things could turn around in the coming months. Investors are also keeping a close eye on NIO's balance sheet, wondering if the company will need to raise additional capital. With cash and investments totaling to 6.6 billion at the end of last year, down 600 million sequentially, there's a concern about the company's ability to continue building out its own production facilities and battery swap network while continuing to lose money. As NIO faces more headwinds, it remains to be seen how the company will navigate these challenges and continue to show growth in this hyper-competitive EV market. As competition intensifies, NIO's growth prospects seem to be diminishing, causing some concern about its long-term potential. If the company's sales trajectory does not improve soon, we could see shares hit new lows. Although management remains confident in the company's future, it's clear that NIO needs to take some significant steps to regain its investor confidence. The company cited several challenges to its profitability ramp, including lower order forecasts for its current generation ES8, ES6, and ET6 models, and inventory provision losses on purchase commitments related to those products. But it's not time to panic just yet. NIO has been clearing out its old stock and offering new incentives to customers as it transitions to its second generation technology platform, NT 2.0. This shift has caused a decrease in production and deliveries in the first quarter as the company readies its manufacturing lines for the new models. While high battery costs are still a concern, NIO's management has reassured investors that supply chain bottlenecks won't be a constraint anymore. Another ray of hope for NIO is that reportedly China's leading battery maker, CATL, has offered to lock in a price level of 200k RMB per ton for the next 3 years for some automakers, including NIO and Li Auto, if they commit to purchasing 80% of their batteries through CATL. This could lead to a significant decline in battery raw material costs and potentially alleviate disastrous gross margins for NIO's performance in Q4. If NIO can execute well and take advantage of these cost savings, it could mark an inflection point in its profitability ramp and lift the pessimism among the investors. This in turn could underpin the return of buying sentiments and renew confidence in the company's ability to meet its targets. Additionally, NIO's margins are expected to improve significantly as it starts delivering high margin models, with management confident that margins will reach double digits by the end of 2023. Furthermore, the company expects to break even in 2024, offering investors a promising outlook for the future. With below par delivery numbers in Q1 2023 and a gross margin well below Wall Street's estimates, it's understandable that there may be some skepticism about the company's projections for the future. While NIO is suggesting that a strong 2023 will lead to better performance, some investors may be hesitant to take this at face value. During NIO's recent earnings conference, an analyst asked if the company could still achieve its 250,000 full-year delivery guidance. The management team reiterated their confidence in meeting their targets, citing the launch of 5 new products in 2023 which could generate 20,000 units each month. We see potential for a profitability inflection point in the near future. As a result, the steep sell-off since December could prove to be an opportunity for investors who share similar optimism, such as myself, to add more exposure. However, it's important to note that NIO is a speculative opportunity and investors must be prepared for worst case scenario, which is taking losses. Thanks for watching my NIO earnings breakdown. If you found this video informative or useful, make sure you hit the like button, make sure you hit the subscribe button, make sure you click that notification bell so you don't miss out on my perspective when it comes to this company and the other things that I'm going to be talking about eventually on this channel as well. I'd love to hear your thoughts on NIO's performance down below in the comment section. Thanks again for tuning in, and we'll see you guys in the next video.